Martin, welcome to our Zinnia Media episode. Happy to have you here.
Hi, Leo. Thanks for having me.
Well, let's start with your career. I mean, you have a remarkable background. You've established more than 50 financial companies. You run stock exchanges such as the one in Switzerland. You could have built everything in the space. Give us two reasons why you focus on real estate.
Well, basically, there are two things I think is important. One, it's by far the largest asset class in the world, and it's heavily unbanked. Only 10% of real estate is actually currently available through the banking system. And two, it is largely excluded from the wealth management portfolio, i.e., it is very difficult for the financial advisor and for the end client to invest into real estate through the trusted system of the financial advisors.
I mean, for our speakers that comes from different part of the space, right? People might think that real estate is an apartment in Miami or an apartment in Spain or an apartment in London, but real estate is beyond that. One of the biggest challenges is putting all the pieces together from structuring one side to the post-investment side. Could you walk us through the three main advantages of having everything streamlined in a vertical integration?
Let me quickly answer to what you said before, which is around what kind of assets are actually available in real estate. And as you rightly said, the apartment is actually the end product of a long process. So there are a lot of value created in building properties, in renovating properties, in leasing properties, in both commercial and in residential. And there's a huge variety where the standard investor cannot participate into. And this brings us to the question of the full value chain. Value many times is created initially by private equity players that invest in these kind of developments or value-add projects, which are then on sold to larger funds. So providing the full value chain means A, you can select and curate the asset itself, you structure it yourself, and you distribute it onwards. What does it allow? It allows you to bring institutional quality to the wealth management portfolio. It allows you to control the entire value chain and therefore deliver the trust. Our client, the financial advisor, is actually crucial for his relationship to his clients. So it's institutional quality, it's curated assets, and it's delivering the full value chain from inception to exit to the financial advisor.
Right. Doing a deep dive on that side, what part of the value chain do you think that the financial advisor or the wealth manager values the most?
I personally think it is one source that delivers him quality, trust, and choice. Because in the end, the financial advisor is delivering trust to his clients. So he needs to be sure that whoever interacts with him, gives him the full thing. And if everything goes right, life is good. But sometimes things don't go right. And then if you are a financial advisor working with your trusted client, you want a trusted provider where you can turn around and say, Martin, something didn't go right this time. How do we fix it together? And then I have to respond along the whole value chain. And don't say this is a problem of the asset partner. This is a structural problem. This is a distribution problem. This is a legal problem. This is a tax problem. No, you want to have this one counterpart which helps you through the whole cycle.
Now, going more into the future and seeing what's happening out there in the market, stating mission is to redefine real estate as a core value proposition within the portfolios of regulated investment professionals. Looking 3 to 5 years ahead, how do you see these portfolios evolve and be mixed alongside equities and fixed income?
I've been fighting about this definition on what is a core asset and what is an alternative asset. So real estate is the oldest asset class in the world. We have been living in some kind of real estate since inception of manhood. So if we look at the true numbers, about 1/3 of global wealth, and that's excluding your own home, is consisting of real estate. So it's the most natural and most core asset class. So not including it as a standard in a portfolio is ridiculous. So if we take this as a basic and say that approximately 1/3 of assets today are already real estate, they should sit inside the portfolio. they should be diversified, and they should be equally easily accessible as stocks and bonds are. And this is where our mission actually lies, to bring curated real estate, allowing the financial advisor to build with each client the portfolio equally as he is doing today with stocks and with bonds. And if we stick here for a second, the role of the financial advisor is changing, and it's becoming more and more difficult to compete with all those online platforms that disintermediate the financial system. So true value of the financial advisor sits in advice. And where do you advise? You advise on selecting specific investments that are superior to ETFs and funds that generate the so-called alpha and therefore have a portfolio made to measure for each individual investor. That's where I believe the true future of financial advisory lies. That's where I believe real estate is going to play an incremental and extremely important role, because it is the big differentiator compared to already extremely liquid stock and bond markets. And that's where we want to play exactly that role for the financial advisor, being their long-term partner.
One last additional question, Martin. What's your message for those conservative investors out there that are starting out building their portfolio on real estate?
I mean, every journey starts with the first step. So go to your trusted financial advisor and start asking to build a portfolio around real estate and integrate it over the next 5 years plus into your portfolio. Select individual assets you believe in, build a portfolio on it, build liquidity ladders with it, and grow gradually into it. Your allocation should be at least 30 to 40% of the overall portfolio, but don't bet everything on one single thing. Don't do it all at once. Grow into it, learn it, and become versatile with it.
Thanks a lot, Martin. It's been a pleasure to have you here at Zinnia Media, and we're looking forward to have you again in the near future. Thanks a lot.
It'll be my pleasure. Thank you so much, Leo.